Hello, everyone, and welcome back to Outspoken Market. Leandro Guerra is speaking. In today's class, I want to discuss with you guys this amazing paper published by the Federal Reserve, the Central Bank of the United States, entitled Kalshi and the Rise of Macro Markets. In a nutshell, what this paper is saying, they are discussing the relevance and the accuracy of the prediction markets. If you don't know, we have websites like Kalshi or Polymarket that you are seeing now in the screen that are essentially betting exchanges on which you can literally bet on anything. Oh, Leandro is speaking about betting, gambling. No, 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 no. No, no, no. Stay with me. It is a website for online betting. Yes, it's gambling. Yes. However, behind this, and because this is an exchange, meaning it's not me betting against the house on which the house always has an advantage, but it's me and other people betting against other people. And the house, of course, they get their share because they need to sustain everything. But for example, I can bet if the Fed decision in March it's going to have a change, we will have a 25 basis point decrease, increase, whatever I think. And it's no longer about me or other market participants having an opinion with bias, but it's about the game theory. Whatever is my opinion or the other participant's opinion, it's skin in the game. We place our money in here and our money is at stake. So it's not a matter of I am an analyst, I will issue an opinion. I'm paid to issue that opinion, regardless if that opinion is right or wrong, or if I'm truly analyzing the data in the best possible way or not. Here, I do the same, but if I don't do my analysis well, I'm gonna lose money. I will not get paid whatever I issue. You know, that is a big difference. And this also leverages what we call wisdom of the crowds, because it's known that from this theory, if you have a large sample of people speaking about something, there is a very high probability that the majority will be right. Okay, this is a very brief introduction about what prediction markets are. Back to the paper, that is the key discussion point for our class today. Now, Leandro, I think I understood what are the prediction markets, but give me again a view. Prediction markets, they offer a new market-based approach. This is what you should have in mind to measure macroeconomic expectations, sport outcomes, whatever you want in real time. And this paper will evaluate the accuracy of that prediction market and its implied forecasts with other players like Bloomberg, for example, or the on-Fed Federal Reserve predictions. And they want to understand whether what we have available in such kind of websites is actually accurate or not. So this will be evaluated in this paper, and the outcomes, they are simply amazing, right? So the authors, they constructed as a database a daily and also intraday probability distributions from the contract prices meaning this contract on which I can bet yes or no against an outcome and get a reward out of that. So they did it, and they had some impressive empirical results that they were truly amazing. For example, Kalshi, that it's another prediction market like Polymarket in this case, their model forecast for the Federal Reserve funds rate has been perfectly 100% accurate on the day before every FONC meeting since 2022. Is that you heard? And the proof is here on the first image, on the first figure. So we see that the forecast error from the Fed, the ones that they will determine what is the interest rate, it's the purple line. And the prediction error, it's not zero, it's around here. The Kalshi mean, median, and mode forecast errors are lower than the ones from the Federal Reserve. And the mode got zero error, meaning 100% a perfect forecast, outperforming both surveys, features, and many other things. We also have the view that this type of markets, they also have a superior or sometimes comparable outcome or accuracy to many other economic series, and they are as good as, for example, the Bloomberg consensus. Do you know what it means? The Bloomberg terminal is the most used and most respected data source in the world for the financial markets. And the prediction markets, they can be as good as or better than Bloomberg consensus on CPI data, that is the inflation data, on macroeconomic forecasts like inflation, like the GDP measurement. And what is amazing is as the volume of transactions and the number of users growing, and this is the chart in a logarithmic basis throughout the years, this enhances and make the quality of the predictions being done here even better. So politics, for example, who likely is going to be the next nominee from the Republican Party for 2028? At this point in time, we have J.D. Vance with 46% chance. It has been higher before. Back in November, for example, it reached its peak on 59.5% probability. Now it's decreasing because we have the growth of Marco Rubio, for example, in comparison to what we had back there in November. And the closer we get to the day of the election, eventually this number will mean a much more accurate probability that whoever is leading it is going to be the next presidential nominee from the Republican Party, for example. In the economical area, there are other types of forecasts. I mean, you can go there and play around. But the key point is the higher the volume, more accurate, because the effect of the wisdom of the crowds is going to be. So you will be able to, let's say, trust or have a better probability of an outcome out of that prediction. So I really encourage you to read the paper, to start knowing more about what the prediction markets are, because remember, friends, this is not about gambling. If you want to gamble, you can gamble, but it's not my business, right? But the point is, all information that you are seeing over here, they can be with a very good approximation, let's call it trusted, more than any consensual stuff from analysts, specialists, whatever. Because remember, that it's the point. If I am an analyst, I'm going to give my opinion, whether if it's right or wrong, or analyze it right or wrong, and I will get paid anyway. Here, whatever is my opinion, that I want to make it public, if I'm right, I'm going to be rewarded. But if I'm wrong, I'm going to be punished because I will lose the money that I put in. So this is what makes this type of markets not just interesting, but also accurate. So have this in mind, because not in my opinion, it's something that it's already happening. This type of data source, especially now that has been endorsed and proven statistically by the Federal Reserve, they are going to change the world. So AI, it's important, but this thing, it's also really important for the months to come. Okay? If you have any questions, any doubts, just let me know. Leave your comment, and I see you next time. Take care. Bye bye.